What's up, everybody? Michael Silva here. You're watching the Stock Market Brief Show. Take a look. It is holding. Oh, this is the cues on the weekly time frame. I drew out a trend line because it has been acting as an area of resistance and support. Previous resistance in these arrows, support in the more recent ones, including this arrow that I recently drew out. You can see we tapped into it and we started moving higher. But is this going to hold? We talked about the potential for a bounce yesterday. We got the bounce, but how far can it actually bounce? Well, as it stands right now, we are right back up to that upper risk range. So now the reward to the upside is greatly minimized if you haven't taken that specific trade. If you did take the trade, congratulations. You could have got in early. The risk was very small. At bare minimum, if you're not taking profits on a trade like that, at least move your stop to break even. So if it does come right back around to stop you out, at least it was a break even trade there. But we are right there at that upper risk range, back above that 50% retracement level. So good start for it so far. I know that Netflix reported after hours and it's not looking good for Netflix. And we have some big other earnings coming out here soon, which we'll dive into. If you take a look at the cues on the 15-minute time frame, we're still just range bound, and you can see we have the upper risk range at 350 and this gap above us that can act as a confluence of resistance. So one good note that I want to call out here is we're back above that 5-day moving average. We talked about, hey, it might just break out. We might come test that, but don't ever be shocked if it comes back down into this range. You can see we came out, we flagged, we started breaking out. Awesome. Can we head higher? Absolutely. We'll see what tomorrow brings. It is down about 1% in the after hours or futures market right now. So, it's going to be an interesting day overall. I'd say that if we come back down to around this 5-day moving average, let's see if that holds as support. If that holds as support, that could very well create another round it out like this, and it could be a potential smaller version of an inverse head and shoulder here, which, potentially into next week might break out, and that could set us up to fill this gap that's even further above us. I'm just trying to think ahead of what the market might do. But yeah, we have a little bit of a reward to the upside based here, looking at that upper risk range. If we take a look at the SPY also was another good one, that 50% retracement level hold. So if you got in it open, if you did the trade, you had minimal risk, you have reward, right? So if you took some profits, congratulations, right? We tapped into the 200-day moving average, the reward to the upside to the upper risk range. Not saying that this is the end-all be-all level. Like, we can get above that. Okay, we can. However, what we've seen recently, 68% of the time it finished within the expected move here. And it's been doing so quite accurately. So if we do get outside of it, I would imagine it could skirt along this upper level right here or just kind of doodle around. But we've also seen volatility where it comes right back down too. So just be mindful of where your risk to reward is. If we get way outside of it, well, if you're not taking profits on a trade from here to up here, it is what it is, right? And if it keeps going higher, congratulations. But if it comes right back down, you can't get mad at something like that if you didn't take those profits, or at least partial profits, or update your stop loss at the minimum. Overall, though, it is forming a nice bull flag, bullish looking day, volume uptick slightly. The RSI got back above the 50 marker. The MACD is curling back up. This is setting itself up for a potential nice move to the upside, maybe into the end of April, into the beginning of May, and then we'll reassess from that point to see what happens. Now, if the 50% retracement level is taken out, I would be paying very close attention to the lower risk level and also the 61.8% retracement level. But as it stands right now, these last 1, 2, 3, 4, 5, 6 trading sessions, you can see we can just put ourselves in a little bit of a box. So don't be surprised if we're back within this box come tomorrow. It's more than possible. If you look at the 15-minute time frame, on a good note here on the shorter time frames, the 15-minute, the hourly, if you take a look at the high, lower high, lower high, lower high, we did break through that trend, giving us an indication that we may finally get to see a little bit of momentum to the upside. You can see here price did stall out at this volume shelf profile, and that's also in confluence here with the gap that's still open and this upper risk range too. So if we do get up into this range, right, it'd be wise if you took the trade out of the gates, to potentially take some profits. If you're long-term holding it, it all changes for what type of trade you're doing. But don't be shocked, to see this 5-day moving average start to flatten out here if we can hold above it and come back down and try to doodle around and eventually try to take out these levels to head higher. Now, if we get way outside of this upper risk range, it could send us up a lot further, right? Because we've been building out open interest in this area. Not all too much, but quite a bit, I'd say. We've been trading within this range here for quite some time. So if we start getting way outside of it, obviously buying into buying would be taking place there. The dollar, this is pretty interesting. The dollar keeps perpetuating itself higher. That is very interesting looking at a longer term time frame. It is now reaching a upper channel here of a 7-year range. So this is a very interesting area of resistance to pay attention to. We can get outside of that range. We've done it before, but as you can see here for the last 7 years, it's been just ping-ponging back and forth around in this channel. So is this resistance going to hold, or are we going to start breaking up further? If we start breaking out further, I think that that's going to put pressure on various equities, as well as mining stocks and potentially even various commodities too as well. But I would also look to see the dollar start to take a breather. Hasn't done it yet, but we'll see. Now this bigger move in the dollar this week, you can see here on gold. Gold was down 1.38%, which was just about $28. And you could see we're still above these key moving averages. So technically, to me, looking at the chart of the dollar, I still think gold's a good bet here. Just watch to see a little bit of volatility pick up here and there. Right, it moves up, it's back testing. It's not going to go straight up in a straight line. But if the dollar starts backing off, well, gold's been doing good with a rising dollar. Imagine what gold can do with a falling dollar. Could be quite good. Same thing with silver. Silver took a breather today too, down 2.9%. Oil was down as well, minus 5.17. This continues to just be massive amounts of volatility here. And we'll see, if this ends up being the top. I couldn't call that, for the life of me here, if this is going to be the top right here. But what I can say is we have a high, a lower high, and a lower high right here. I redrew this out. It was a triangle, right? But then we broke down, it was a bear trap, and then we came above it and we came back in. So I'm looking at this now as 2 areas of support. So think of this right here as the bulls camp. The bulls are holding this fortress together, but the bears are making progress to take out this camp here. So keep a close eye on these levels here. Overall, still in bullish context. Until this changes, until we take out this high, that can send price of oil a lot higher there. Okay, so 10-year yield, also another big one to watch. This one continues to just move higher and higher. We are not too far off from 3% on the 10-year yield or the 30 marker there. And if you look at the longer time frame, the reason why I'm showing this is because tech hasn't really gotten hit all too hard. And this is obviously a very aggressive move. It's darn near vertical straight up into that 3% level. And as you can see, there's a couple areas of confluence here of resistance. We have right here was resistance, right here was resistance, right here was resistance. And then on top of that, we have the inverse head and shoulder pattern that if you measured this from here to here, that is actually a full measured move too. So rates may actually start backing off here if we can't get above and hold above that 3%, which tells me that also the bonds, TLT, which has been getting hammered, may very well start to find itself a bottom, but it still hasn't really set up itself as a good possible trade yet, unless if you're trading just bounces. Okay, now if we take a look at what happened today in the 11 sectors, consumer discretionary, real estate, and communication services were up there at the top. As far as, what's going on after hours that we got to pay kind of attention to, Netflix is down around 25% after hours, so that can shake things up a little bit in the markets as we're seeing already kind of take place. However, if you look at something like IBM, it's telling a little bit different of a story. It's up in the after hours session. The big one to watch is going to be Tesla. Tesla is going to be reporting earnings tomorrow after the market close. That will be interesting to watch, especially if you take a look at Tesla on the daily time frame. It's really in this channel here, or right here at the middle of the channel range, forming somewhat of a bull flag. So if it's positive news, we could shoot right back up to around 1200 and try to, retest these previous highs. But keep in mind, there's also a very, it could very well break down from this point too. It's going to be me personally, I'll see what the price action looks like tomorrow to get a better idea. But personally, I'm just kind of sitting back on the sidelines a little bit here to see what the market wants to do during this time. Now, Interestingly enough, real estate was number 2. I will show you some real estate plays that I shared with my Discord. So first and foremost was Kimco Realty. You can see areas of resistance, and I posted this right around this point right here, and we started breaking out up 2.75% on the breakout. Had some decent volume on it, so this and great relative strength. MACD's pointing up. So there's always opportunities in these markets. You need to really just dive in deep. Another one that I was looking at was Extra Space Storage. This was actually from a while ago that I posted. I'll show you the post, but price action was getting very tight in here, and we saw a nice little break above with good volume. That's what I look for. I look for expansion, contraction, and then try to get in where we can have minimal risk. And the reason why I'm showing you these is because it shows you an idea of what kind of trader that I am. Here's another one, IRT, Independence Realty. And you can see here, resistance. It was up 1.64% today, but you can see the price action is very tight. And the reason why I pick these type of trades is because, well, you can have a tight stop loss, but you never know how high these things can sometimes go when they break out of these areas of contraction. Here you go. Here's the, some of the charts that I showed. So I was showing the EXR way back when it was coming out of this, when it was about to come out of this down sloping trend line. We broke out of that, and now we're also consolidating here. And then here's a couple of the other ones that I posted just yesterday. If you're wondering how to get into that, I have trade ideas linked below. I only charge $9 a month. It's extremely inexpensive for what it is, and you could even do the annually, where it ends up being like $7 and some change per month. But that's where I give some swing trade setups. You can access my weekly watch list, which I give a bunch of different chart setups, and I walk you through on a video, what it is that I look for. They're in a specific order. I also track 31 products, and I give you the expected moves for all of those every week. Then you get obviously access to the chat community, and we have some great individuals in there. So let's continue on. IWM, I wanted to point this out also. It's been going sideways, choppy here, but the 61.8% retracement level held. Just pay note that we're not too far off the upper risk range. It does look to me that we could potentially tag the upper risk range here for the IWM. It has a little bit more opportunity to the upside than the other indices. And now when I look at the 15-minute time frame, we talked about the possibility of this channel, right? We talked about the upper range, lower range, and look at, we came right up to the upper range right here. So there is a confluence area of resistance, right? We have a gap. It was filled, right? And then we have previous resistance and resistance here, forming could potentially be somewhat of a bull flag taking place here. But the longer it holds above this level, the 5-day moving average could start curling back up. So that's a good note to potentially, if we get a pullback, look for a retag of the 5-day moving average. Maybe we start bouncing from that level, and then we start breaking out and try to get over to that 205. Maybe we don't get that back test, but 205 is in range, and that also matches up with his volume shelf profile over here too. So overall, looking pretty strong as far as the basing out, but really it's just a tactical range that you have to trade within. A couple indicators I'll quickly go over. I'm looking at the NYA. This is the New York Stock Exchange. It's still doing that flag that we talked about a few videos ago with the positive divergence on the NIMOT. We'll see here if it can make a move out of this and start breaking out and head to the upside. Okay, if I look at the old fool indicator right now, it's actually bearish. Looking at the NASDAQ composite down here, we did see that good day, but really it's just been going sideways, so we need a little bit more confirmation here. And that's really actually the only indicators that I want to show you today. So I'm going to wrap it up for the day. It was a quicker episode, but I wanted to just give you some thoughts on a couple of different assets that I've been watching, mainly the 10-year yield running into resistance. We know that if the 10-year yield continues to perpetuate at these levels, it's going to break something at some point, and we may have not even seen things break yet from this recent run-up. So we got to be very mindful of that. We keep seeing massive volatility in oil, and now the dollar on top of all of that is running into a range that hasn't seen, the top of for quite some time, but it's been in this channel for 7 years. The last piece here is this trend line is still holding for the Qs at this particular point in time. But be mindful of the market structure, how the moving averages are starting to flatten out, and we're seeing increased volatility, which could mean we are entering into a period of distribution, right? Markup stage 1, accumulation stage 1, markup stage 2, stage 3 is distribution, stage 4 is that decline. Hope that helps out. Hope that gives you some insight. I'll see you back here on the next episode, everybody.